Envision waking up to a reality where your money truly works for you, with the comforting sound of dividends flowing into your account, instead of just coins jingling in your pocket. Picture a world where financial freedom is not merely a concept, but an achievable goal. This isn't a distant fantasy, it's attainable. Just as the idea of retiring comfortably varies from person to person, there are numerous financial options to explore. Some may consider reverse mortgages, selling belongings, or relocating to more affordable areas. Welcome to the Trade Savvy Academy. Investment dividends. This is one of the best options that frequently goes unnoticed. This approach can potentially help you generate $3,000 each month. Stay tuned, as we will outline 3 quick methods to achieve this target. So, what's the key factor in determining your ideal investment amount? It fundamentally depends on your desired lifestyle and, of course, the financial figures involved. While the average individual spends between $50,000 to $70,000 annually, this may not serve as the right benchmark for you. You have the flexibility to modify it according to your unique needs, goals, and comfort level. You can tailor this according to your unique goals, desires, and comfort level. Now, let's add an element of intrigue. Envision a life where your investments create a steady income stream, enabling you to relish the rewards of your hard work without depleting your principal. It's akin to having a hidden money tree that continually flourishes and supports you with passive dividends. The potential becomes alluring. Keep in mind that this journey is about discovering the equilibrium that resonates with your aspirations. So, take a moment to envision your future. Picture the lifestyle you wish to pursue, and then allow the figures to steer you toward the investment amount that will transform dividends into your pathway to financial independence. In this video, we'll guide you on achieving the goal of $3,000 a month, or $36,000 a year. Before we dive in, let's explore what dividends are and how they function. Picture yourself as a partial owner of a company by holding some of its stock. When that company earns a profit, it faces several options regarding that profit. It can either reinvest the earnings to expand the business or distribute them among its owners. In publicly traded companies, these owners are known as shareholders like yourself. If a company opts to share part of its profits with shareholders, this distribution is referred to as dividends. As a shareholder, you would receive a fraction of that profit proportional to the number of shares you own. Dividends can be paid out in cash, either through direct deposit or via check, or they can be reinvested to purchase additional shares of the company's stock. Different companies have varying schedules for issuing dividends. However, many investors now opt for a quarterly schedule. Let's discuss dividend yield, which measures the income generated from dividends relative to the stock's price. This metric can differ significantly between companies and may fluctuate for the same company over time. Typically, well-established firms provide higher dividend yields compared to smaller or newer enterprises. Calculating dividend yield is straightforward. You take the annual dividends per share and divide that by the price per share. For instance, if your stock is valued at $100 per share and you receive $8 in annual dividends, your dividend yield would be 8%. Grasping dividend yield allows you to assess your investments effectively. You can compare various stock prices and make informed decisions based on your objectives and risk tolerance. By investing in dividend-paying stocks, you have the opportunity to generate consistent income without having to liquidate your shares. This implies you can benefit from a consistent flow of income while maintaining your investment, which is quite remarkable. If you are looking to generate passive income through dividends, you should consider this compelling strategy. It offers a way to build wealth over time and potentially rely on the income produced by investments. Now, let's explore 3 straightforward strategies that can assist you in reaching your goal of earning $3,000 monthly or $36,000 annually from dividends. Strategy 1, known as covered call ETFs. One of the fastest routes to living off dividends is by investing in covered call ETFs. These distinctive funds provide investors with the chance to generate income through both stock price increases and dividend distributions. How does this operate? The ETF invests in stocks while simultaneously writing call options on those same stocks to create extra income. Call options grant the buyer the right, but not the obligation, to purchase a stock at a predetermined price within a specified time frame. Therefore, when the ETF sells call options on its portfolio stocks, it collects premium income that is distributed as dividends. Additionally, if the stock price exceeds the strike price of the call options, the ETF may achieve capital gains since it will be obligated to sell those stocks. There are several well-regarded covered call ETFs worth considering, such as XYLD, OILK, and EWZ. These funds typically offer appealing yields, often reaching into the double digits, which are considerably higher than those found in many conventional dividend stocks. Let's examine their 12-month trailing yields. XYLD, OILK, and EWZ all present a yield of 11% or higher. The advantage of these ETFs is their capacity to generate income from both dividends and option premiums, resulting in a more consistent and dependable stream of passive income. However, it is crucial to recognize that these ETFs carry certain risks. For example, options may expire worthless, or stock prices may decline, affecting overall performance. Now, let's apply this strategy to your financial journey. If your aim is to earn $3,000 per month through these investment vehicles, the answer is that you need to carefully assess your investment strategy and consider the potential risks associated with covered call ETFs while aiming for your income goal. The formula to understand how much investment you would need to earn your desired income is as follows. You take your desired income and divide by the expected dividend rate of return, or dividend yield, and this will give you the investment amount required. We can modify the figures accordingly based on the current yield levels. You would require an investment between approximately $290,000 and $320,000. This is quite attractive, especially when compared to traditional dividend stocks, where an investment of around $2 million would be necessary to achieve a similar income level. By opting for covered call ETFs, you can attain your financial objective of earning $36,000 annually or $3,000 monthly without needing a substantial investment. This approach provides a way to create a consistent income stream while reducing the capital needed. Therefore, if you are keen to pursue this route, you can consider covered call ETFs as a means to realize the aspirations of living off dividends and achieving financial independence. Let's examine another method for you to generate an annual income of $36,000 or $3,000 monthly through dividends. This approach entails investing in specific companies known as real estate investment trusts. We will name Strategy 2 as high-yield real estate investment trusts. These trusts function like groups that invest in various real estate properties such as shopping malls, office buildings, and residential apartments. These groups profit from their properties and distribute a portion of the earnings to their investors. For you, there are several promising real estate investment trusts to consider if you aim to earn passive income through dividends. Notable options include Starwood Property Trust, Two Harbors Investment Corporation, and Brandywine Realty Trust. These usually offer an annual dividend yield of 12 to 20%. This strategy provides you with viable options for earning passive income through high-yield real estate investment trusts. Real estate investment trusts have a proven history of delivering a reliable income stream to their investors through dividends. Historically, real estate investment trusts have demonstrated strong performance, achieving an average annual return of 11% over the last 2 decades. This suggests that investing in these trusts could be a wise strategy for you to potentially enhance your wealth while also receiving consistent income. It is crucial to understand that the income generated from real estate investment trusts can fluctuate, as it is influenced by factors such as rental demand for properties and overall economic conditions. While these investment trusts may offer higher returns compared to traditional stocks, they also carry risks, particularly during economic downturns. To determine how much you need to invest in order to earn $36,000 annually from real estate investment trusts, assuming you anticipate an annual return of approximately 11%, we can use the following formula. Your investment would equal the desired income divided by an expected rate of return. Let's substitute in your desired income. In this case, your investment would equal $36,000 divided by the rate of return, which would be 0.11, which means $327,272. Thus, you would need to invest about $327,000 to achieve your goal of earning $36,000 per year from real estate investment trusts. However, this figure may vary based on whether you diversify your investments across multiple real estate investment trusts or concentrate them in a single one. A solid approach for you to retire using real estate investment trusts is to consistently save and invest a specific amount of money each week, allowing the dividends to accumulate until you achieve your financial goal. If you remain dedicated and patient, you could attain financial independence in approximately 5 to 8 years. When investing for dividends, it's crucial for you to have a clear plan. You should determine how much money you need and what your objectives are. This clarity will assist you in selecting the most suitable real estate investment trusts for your portfolio and ensure that you adhere to your strategy over time. Each individual's circumstances vary, so you may discover that you can live comfortably on less than $36,000 annually, or you might require more if you have a family or specific lifestyle choices. One significant advantage of real estate investment trusts is that, unlike traditional stocks, they frequently distribute dividends monthly. This feature makes them an even more appealing option for those seeking a reliable income from the stock market by adopting the strategy of investing in real estate investment trusts. You have the opportunity to reach your financial aspirations of generating $36,000 annually or $3,000 monthly through dividends. This approach could transform your vision of living off dividends into a tangible reality. If you are prepared to embark on the journey toward financial independence, delving into the realm of real estate investment trusts is a wise decision. This strategy holds significant potential for realizing your dreams. Let's move on to strategy number 3, Dividend Aristocrats. Dividend Aristocrats are distinguished stocks that are part of a select group within the S&P 500 index. These companies have an impressive history of consistently increasing their dividend payouts to shareholders for no less than 25 consecutive years. They are regarded as excellent choices for individuals seeking to generate income from their investments. Some of the leading dividend aristocrats include 3M, Franklin Resources, and Eversource Energy. These companies typically offer an average dividend yield of nearly 7%, which is lower than that of covered call ETFs and real estate investment trusts. However, they are highly reliable in their dividend payments. Dividend aristocrats are recognized for their ability to consistently increase dividends year after year. To qualify for this designation, a company must have raised its dividend payout for at least 25 consecutive years. Whether investing in these stocks is a wise decision depends on your individual goals, investment timeline, and risk tolerance. The firms that constitute the dividend aristocrats span various industries but share common characteristics. In addition to regularly increasing dividends, they are established companies that have demonstrated growth over time. Typically, these are large corporations that are less susceptible to acquisition by other firms. They also tend to perform better during challenging economic conditions, which enables them to generate steady profits. To achieve your goal of $3,000 per month with a 7% dividend yield, you need to invest $514,285 to attain complete financial independence. While this may seem like a significant investment compared to traditional dividend stocks, which would require an investment of $2 million for the same payout, it is a much smaller amount. A prudent approach for you would be to diversify your investments across several dividend aristocrats to mitigate risk. By investing in these established companies, you can potentially secure regular income from your investments. These strategies and dividend stocks covered in this video boast a solid history of raising dividends, and their presence in the S&P 500 index enhances their performance credibility. If you're uncertain about where to discover investment opportunities for income generation, check out the video displayed on your screen. It highlights other top dividend ETFs that can help you earn income quickly. Accelerate your dividend income objectives with straightforward expert advice.